You just said you want to own hard assets, you want to own things like Bitcoin, but the truth is Bitcoin has acted basically like a risk asset. And actually, I would make the argument that if you look at where real estate is in many parts of the country, take the rental piece out of it, that's also come down in large part in harmony with what we're starting to see in the equity markets.
I think you're getting it backwards. Listen, Bitcoin, people say, was it an inflation hedge? When we worried about inflation, you could have bought Bitcoin at 10,000 and it went to 70. So it was a spectacular inflation hedge. When Powell started beating inflation over the head with a sledgehammer, of course, Bitcoin came back down, as did lots of assets. If he flinches, if he gives up this fight in inflation before inflation comes down, which is what Barry's hoping for and advocating, you're going to see Bitcoin and other assets take right back off.
I'm not advocating he'd take a fight against inflation. I think he's done enough. And I think he'll see, because your consumer that was overstimulated, his savings rate has gone from 33 to 5%. And he's now using his credit cards. Credit card delinquencies will increase. The banks know it. That's why they'll cut back credit lending. And you're going to see the rollover of the economy. It's going to be evident for everyone to see the Fed has done enough, and let them just wait. And they're going to have to lower rates because the economy will crumble. What you're seeing in manufacturing is the dollar strength, right? It doesn't happen in 2 weeks. It doesn't happen in a week. You can't be week to week in payroll numbers. It's insane. Who would run a business like this? Look at the impact. Look at the markets are saying. Look at the lack of IPOs, the lack of capital raising. Look at what's happening look at the value of the homes. Homes are falling. Rents are rolling over.
Hey, Mike, let me just ask about what we've seen with the Bank of England being forced to raise rates because of the market instability there. I mean, those are the types of things that really start people worrying. Is there going to be a contagion effect? And I'll ask you, because of your expertise in the markets, are there other areas where you see concerns like that? Is there cause for concern?
There are huge imbalances, right? I mean, the Japanese are trying to run a policy of keeping rates at zero and buying ad infinitum their own government bonds. At the same time, they don't want their currency strong and they intervene. Like, those two things don't make sense and they can't happen. And so as long as the Fed stays hawkish, and I think, despite what Barry's saying, the Fed's going to stay hawkish. Owners equivalent rents are going to stay high. Wages are staying high. Employment is still, there's a lag effect. And they feel like if these numbers keep printing high, they've got to do something. And so I think the Fed is certainly going to raise rates a few more times. Certainly the market has sniffed out that if the world starts breaking, the Fed will have to react. It's the same way Bank of England had to react. And so I think October is going to be a reversal month, right? You've already seen the first 2 days, yields much lower, stocks much higher. But that doesn't make the imbalances go away. And so we've got, one of the big risks in the world is Japan, right? They just keep buying and keep buying and keep buying. I mean, that currency takes out 145, it could explode north. And so there's still a ton of instability around. Once Powell flinches, I think things calm down, right? But until then, and until we see it, I think people are going to be on pins and needles.
Welcome to the Crypto Teacher. And I come back with that video just to make you think. And we have Mike Novogratz on CNBC. And guys, they are playing the Hegelian dialectic. Now they're saying the Fed is crushing the market. How soon things have changed. 2 years ago, the Fed was pumping. Now reality is setting in. And these guys that are on this television, they already knew what was happening. They're finance guys, Goldman Sachs guys. So they already know when the Fed started shrinking liquidity and raising rates, they already knew what was going to happen to the market. They've already positioned their portfolios. But when it comes to the average Joe, those 401ks and pensions are taking a hit. And then we have the UN saying that the Fed needs to stop raising rates. But they never told them, don't print all this money. Because if you print all this money, it's going to cause inflation. Remember, the NWO caused the problem. Wait for the reaction and run in with the solution. Guys, do not forget the plan. Don't let anybody talk you out of the plan. It's the fourth industrial revolution. They're going to destroy this legacy market and give the digital economy rise. The masses can't see it. That's the reason why they control the media. Keep them confused. So therefore, they can rise the robots, algorithms, and drones and the sheep go inside the metaverse. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
When you were on with us a couple of weeks ago, you were very worried about the potential future for the economy, where things are headed because of what the Fed's been doing. We've been watching the market pick up this morning and on Friday, yesterday, the day before, we've been watching this big upswing. Do you think that's premature?
It's all in Powell's hands. I was on a couple of Thursdays ago, and right after the close, FedEx announced their biggest miss in 20 years, I think it was, and then you had Nike's report. You're going to see a lot of that, what I really cautioned is the Fed had to be slower and look at the data, look at the impact of their raises. They're screwing up the entire globe, as the UN pointed out today. I'm actually talking to you from Japan. I'm in Tokyo right now, where it's night, and they have a crazy currency here. It's 144 against the dollar. It's going to scramble global economics. The pound was, I guess it's 113 today, but it fell to 104 when they came up with that unusual fiscal policy and stimulus. So, you're not just Powell is affecting all of the globe's markets. He's affecting currencies that will affect trade, global trade, imbalances, dollars. The Middle Eastern nations are long oil, obviously, but they're also long dollars, and they have an incredible purchasing power because it's tied to the dollar. So they can go to England and buy everything. And the same is true with the Chinese. They're tied to the dollar too, but it makes their exports less competitive, and they need to get their economy going. So the chain reaction of Powell's, I'd say, backward-looking data. I mean, you don't have to look anywhere. We wiped out $36 trillion of global wealth in this correction. I mean, that is going to have knock-on effects, not to mention the cracks that are developing in real estate, the construction projects that will be halted, banks' loans that can't be refinanced because the banks are freaking out because they don't know where the Fed policy is going to be. At the same time, he's been raising rates. He's liquidating the balance sheet of the country. It's the tightest monetary policy we've ever seen. And the real estate complex, the stocks in the real estate index are back to where they were in the GFC. So the market thinks the world is going to end. And Powell is pretending, and your guest earlier today said, they need credibility. Believe me, they have credibility. They look at the stock market, look at $36 trillion of wealth lost. And we're not arguing that the Fed has to act to bring down inflation, but they should understand where the inflation came from. It came from all those global stimulus packages on the back of a reopening global economy. And it was to the moon and beyond. They missed the meme stocks, they missed the casino. And now that we're building momentum and people are getting employed and wages are rising, now they want to stomp on the whole thing and end the party. And, it's kind of like, I feel like he's the captain driving the Titanic into the ocean. And consumers in the U.S. are still spending, but it's inevitable that they can't keep this up. So the Fed has to stop and just look at the data. I said it before, I'll say it again. The market, this equity market and the bond market move overnight on the Fed's moves, but the real economy takes time. And jobs, investment decisions will be put off. Capital spending will slow. The tech stocks you mentioned earlier, Facebook is giving up some space in New York. I mean, they're going to cause unbelievable calamities if they keep up their action, not just here, all over the whole globe, because they are affecting. Europe has to raise rates to protect their currencies, and they were never fast-growing economies. And their inflation is almost completely driven by the oil crisis, and particularly the Ukraine-Russia thing. So we might actually want to see how that pans out, too, because it looks at the moment with Ukraine's success that this may not last that long. He may have to either give up or be ousted, and the markets will rally on that. I think the market is looking at that purchasing number and saying the manufacturing index and saying, well, maybe he'll take notice this time and we're reaching the top of the curve. I'm not so sure. I think the Fed governors are really not paying attention to the real economy and what's happening out there. The housing market, car sales. I mean, you're going to see slowing everywhere. Nobody can afford a car with a 7% payment. And, and just look at the stock market. I mean, the wealth lost is money lost. That's purchasing power. High-end homes in New York, you reported on that a minute ago. I mean, it's going to pan out across the globe, not just the U.S., and there is no engine of growth. The exciting thing, that you want to look at the positives, it is Russia and the Ukraine situation ending probably earlier than we thought, maybe within 6 months. And eventually China will reopen, and that will actually help the global economy as they go back to work. But other than that, I can't think of any major positives right now.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.